的朋友跟媒体的朋友，大家午安，我是台积电企业讯息处的孙佑文，欢迎您今天来参加我们2018年第3季的法人说明会。由于这个法说会是向全球投资人同时连线转播，所以我们全程会使用英文，请您见谅。Welcome to TSMC's third quarter 2018 earnings conference and conference call. This is Elizabeth Sun, TSMC Senior Director of Corporate Communications and your host for today. Today's event is webcast live through TSMC's website at www.tsmc.com. If you're joining us through the conference call, your dial-in lines are in listen-only mode. As this conference is being viewed by investors around the world, we will conduct the event in English only. The format for today's event will be as follows. First, TSMC's Senior Vice President and CFO, Ms. Laura Ho, will summarize our operations in the third quarter 2018, followed by guidance for the fourth quarter. Afterwards, Ms. Ho and TSMC CEO Dr. C.C. Wei will jointly provide company's key messages. Then we will open both the floor and the line for the Q&A. For those participants on the call, if you are not yet have a copy of the press release, you may download it from TSMC's website at www.tsmc.com. Please also download the summary slides in relation to today's earnings conference presentation. As usual, I would like to remind everybody that today's discussions may contain forward-looking statements that are subject to significant risks and uncertainties, which could cause actual results to differ materially from those contained in the forward-looking statements. So please refer to the safe harbor notice that appears on our press release. And now I would like to turn the microphone to TSMC CFO, Ms. Laura Ho, for the summary of operations and current quarter guidance.
Good afternoon, everybody. Thank you for joining us today. My presentation will start with financial highlights for the third quarter and followed by the guidance for the fourth quarter. Third quarter revenue in US dollar reached $8.49 billion, which increased 8.1% sequentially, reflecting customers' new product launches using our 7nm and a more favorable foreign exchange rate. Third quarter revenue came in stronger than the revised guidance that considered the impact from the August 3rd virus incident, as we were able to make up most of the delayed shipments. In NT dollars, revenue increased 11.6% sequentially. Compared with second quarter, gross margin decreased 0.4 percentage point to 47.4%, as the unfavorable technology mix was partially offset by the profitability improvement in the back-end business, while the more favorable exchange rate offset the virus incident impact. Total operating expenses increased by 1.7 billion NT dollars. The increase was mainly for 5nm and 7nm plus development. Thanks to operating efficiency, total operating expenses represented 10.8% of revenue versus 11.3% in the second quarter. So our operating margin improved 0.4 percentage point sequentially to 36.6%. On tax expenses, after a step up in tax rate to 17.5% in the second quarter due to the accrual of retained earning tax, our effective tax rate fell back to 10% in the third quarter. We expect the full-year tax rate to be about 12%. Overall, our second quarter EPS was $3.44, and ROE was 23.2%. Now let's take a look at wafer revenue contribution by application. During the third quarter, communication and industrial standard increased 24% and 6% respectively, while computer and consumer decreased by 35% and 1% respectively. Now, let's take a look at revenue by technology. 7-nanometer process technology contributed 11% of total wafer revenue in the third quarter. 10-nanometer accounted for 6%, while the combined revenue from the 16 and 20-nanometer accounted for 25%. Advanced technologies, defined as 28-nanometer and more advanced technologies, accounted for 61% of the total wafer revenue. Moving on to the balance sheet, we ended the third quarter with cash and marketable securities of 604 billion NT dollars, a decrease of 145 billion NT dollars from last quarter, mainly as we paid out 207 billion of cash dividend, while we borrowed 43 billion short-term loans for hedging purpose. Correspondingly, current liabilities decreased by 141 billion NT dollars. On financial ratios, accounts receivable turnover days remained at 38 days. Days of inventory decreased 1 day to 73 days due to stronger wafer shipment during the quarter. Now let me make a few comments on cash flow and CapEx. During the third quarter, we generated about NT 94 billion cash from operations and spent 70 billion in capital expenditures. As a result, we generated free cash flow of NT dollar 24 billion. After we pay our cash dividend and borrow short-term loans, cash balance decreased by about 143 billion to 489 billion at the end of the quarter. In US dollar terms, the capital expenditure spent in the first 3 quarters of 2018 totaled $6.7 billion US dollars. I have finished my summary of financial. Now let me provide you the fourth quarter guidance. Based on the current business outlook, we expect fourth quarter revenue to be between 9.35 billion and 9.45 billion US dollars, which is a 10.7% sequentially increase at the midpoint of the guidance. Based on exchange rate assumptions of $1 to 30.80 NT dollars, our fourth quarter gross margin is expected to be between 47 and 49%. Our fourth quarter operating margin is expected to be between 36 and 38%. This concludes my financial presentation. Let me follow by making a few comments about the near-term demand, inventory, capacity, and CapEx. Now, on the near-term demand and inventory, we conclude our third quarter with revenue of NT dollar 260.3 billion or US dollar 8.449 billion, which is above our revised guidance. According to the revised guidance, the computer virus incident on August 3rd was estimated to have impacted our third quarter revenue by about 2% and gross margin by about 1 percentage point, respectively. However, we were able to make up about 75% of the affected shipments in the third quarter. So overall, our third quarter result was mainly driven by strong demand from product launches using our 7-nanometer technology. Moving into fourth quarter, despite the current market uncertainties, our business will benefit from a continuous steep ramp of 7-nanometer for several high-end smartphones, as well as the demand for 16/12 nanometer for the launches of new generation GPU and AI. However, this growth will be partially offset by continued weakness in cryptocurrency mining demand and inventory management by our customers. Fabless DOI exiting third quarter 18 was several days above seasonal level, slightly higher than what we expected 3 months ago. We forecast fabless DOI to continue to stay at this above seasonal level exiting 2018. Now, let me make some comment about capacity and CapEx. At TSMC, we build our capacity according to customers' demand. We are continuing to increase 7-nanometer capacity to meet the strong customer demand. We reiterate our 2018 CapEx to be between $10 billion and $10.5 billion. In addition, as I have talked about before, although our leading edge's capital costs continue to increase due to increasing process complexity, we are able to offset its impact to our CapEx by productivity improvements and further optimization of our capacity planning. Going forward, we expect annual CapEx needed to support our 5 to 10% revenue CAGR in US dollar terms in the next few years will continue to range between 10 and 12 billion US dollars. I conclude my remarks. Let me turn the microphone to CC.
Thank you, Laura. Good afternoon, ladies and gentlemen. Let me start with 2018's year's outlook. For the full year of 2018, we forecast the overall semiconductor market, excluding memory, will grow between 5 and 7%, while foundry is expected to grow between 6 and 7%. For TSMC, as Laura has just indicated, that our second half of 2018 business will be strongly supported by the 7-nanometer ramp-up, which is mainly driven by a few new smartphone launches. However, our business is also negatively impacted by further weakening of cryptocurrency mining demand. As a result, we estimate our 2018 growth rate will be about 6.5% in US dollar terms, which is close to the foundry industry's growth, but slightly below our 7 to 9% guidance given in the last conference. Now let me update you about the August 3rd virus incident. On August 3rd, TSMC experienced a computer virus outbreak which affected a number of computer systems and fab tools. The infection was due to misoperation and insufficient firewall controls. We have since corrected these problems to ensure such virus incidents will not happen again in the future. Remedial actions including the following: implementing an automatic system to guarantee foolproof execution so that such misoperation will not happen again, enhanced firewall control for fab isolation, and network control to each individual computer. More enhancements are ongoing for further improve tool immunity against future infections. TSMC sets top priority for such security enhancement. Now let me talk about the N7 and N7 Plus and the EUV's progress. TSMC's N7 technology is now available for customers to unleash their innovations. This is the first time in the semiconductor industry a most advanced logic technology is available for all product innovations at the same time. We continue to work with many customers on N7, N7 Plus product design and expect to see more than 100 customer product tape-outs by end of 2019. We expect 7-nanometer to be a long node and will attract multiple waves of customer adoptions. N7 Plus is in risk production now. Since N7 Plus has 15% to 20% better density and more than 10% lower power consumption, we are working with many customers for their second wave product design on N7 Plus. Although the number of tape-outs today accounts for a small portion of the total 7-nanometer tape-outs, we expect the activity to pick up at a rapid pace in 2020 and beyond. Because N7 Plus is using a few layers of EUV photolithography to have better cycle time and pattern control, we have made steady progress on EUV technology development towards high-volume production. Tool availability, EUV power, productivity, defect reduction, mask improvement, material and process optimization are all on schedule. A few customers has already made plans to adopt our N7 Plus in their 2019 products. Let me move to N5 status. Our N5 technology development is on schedule. We have completed the design solution development and are ready for customers' design start. The N5 risk production schedule in first half 2019 stays the same. Compared to N7, TSMC's N5 deliver 1.8x to 1.86x logic area reduction and close to 15% to 18% speed gain on ARM A72 core. We expect to receive first customer product tape-outs in spring of 2019, followed by production ramp in first half 2020. Now let me talk about the N28, N22, and mature node strategy. Due to faster than expected technology migration from 28 nanometer to 16 nanometer and below, 28 nanometers of overcapacity becomes an industry-wide phenomenon and is expected to last for a few years. TSMC's mature node strategy is to work closely with our customers to develop specialty technology solutions to meet customers' requirements. For example, we continue to develop 22 nanometer for scaling benefit and better performance. We are also developing 22 nanometer for CMOS image sensor, MRAM, and RRAM. For all mature nodes, TSMC will continue to develop a variety of special technologies such as power management IC, embedded flash, image sensor, MEMS, to maintain our good capacity loading rate and to increase our technology value to customers. Now let me talk about advanced packaging update. TSMC has been developing advanced wafer-level packaging technologies to integrate advanced SoCs, memories, integrated passive device to enhance system performance. We believe our advanced packaging solutions will contribute to our business growth. We are now expanding the application of both CoWoS and InFO, especially for high-performance computing. Most of the CoWoS products require integration of SoC with high bandwidth memory, HBM, in 3D stack. We are making good progress in qualifying multiple HBM sources through close collaboration with customers and the DRAM suppliers. We are also working with a few leading customers on SOIC, which stands for System on Integrated Chips, where multiple heterogeneous chiplets will be integrated with close proximity to deliver better performance. And we target to start production in 2021 timeframe. That's all my report, and thank you for your attention.
Thank you. This concludes our prepared statements. Before we begin the Q&A session, I would like to remind everybody to limit your questions to 2 at a time to allow all participants an opportunity to ask their questions. Questions will be taken both from the floor and from the call. Should you wish to raise your questions in Chinese, I will translate it to English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the star, then 1 on your telephone keypad now. Questions will be taken in the order in which they were received. If at any time you would like to remove yourself from the questioning queue, please press the pound or the hash key. So we can start. Deutsche Bank, Michael Zhou first.
Thanks. 2 questions. One is, what is the outlook for 7nm sales portion in 2019? Can you give some color at this moment based on your current visibility or some tape-out numbers?
Michael, your question is what is the outlook of 7nm?
In 2019.
In 2019?
In terms of sales portion or any indication?
I would like to answer the question, say it's a very strong demand in all the platforms, in all the market sector, which including the mobile phone, high-performance computing, that's included graphic, a lot of AI accelerator, FPGA, you name it. A lot of customers working with us, as I just stated, and we expect 100 or more than 100 tape-outs, product tape-outs in year 2019. So, did that answer your question?
Is that fair to say the 7nm sales portion will be more than 20% of total sales for the whole year next year?
Next year?
Let me answer that. You have seen our report, the 3rd quarter, 7nm accounts for 11%. And 4th quarter will be more than 20%. So for whole year 2018, 7nm will contribute close to 10% of total TSMC revenue. Go beyond 2018, we will have very, very strong ramp in 2019 as well. We expect the revenue contribution will be much higher than 20%.
Second question, CC, you mentioned 28nm oversupply in the industry could be normal situation over the next few years. So, will management consider converting some 28nm to advanced node? I know you mentioned some specialty, especially PMIC in 28, CIS in 28, so which should be a good volume. Product, but would you consider to convert some capacity to advanced node?
Good question, Michael. Actually, we are moving from 28nm to 22nm, which is a smaller geometry and more advanced. I think your question is that are we consider moving into 16, convert some of them? We keep the flexibility to moving the wafer around so they can support each other. We already did that. So there are a lot of commonality in the tools. So some of that capacity or part of the capacity can support other technology node.
Also, it means that if, for instance, if your 12nm demand is beyond your estimate, so you can use some 28nm to do some 16nm product in the future.
We have some tools that have a commodity. Say, for example, implanter,
yes,
right? And clean up and a lot of things. But let me stress again. I say the overcapacity for a few years. However, we are developing 22 nanometer. We are developing a lot of specialties. And for TSMC, this is only probably a couple of years. We are going to fully utilize 28 nanometer again.
Then is that fair to say your 28, 22 UTR over the next few years, you are confident you can maintain maybe above 85%, about 90%?
I'm not going to answer this question, but after a couple of years, you will be the high utilization rate again.
Oh, sure. Thank you.
Next question will be coming from Credit Suisse, Randy Abrams.
Okay, yes, thank you. I wanted to ask a question about sales and also gross margins. The sales in fourth quarter is actually fairly good, factoring in the business environment. Could you talk maybe the forward view? You mentioned also fabless days of inventory may exit the year a few days high. So with the implications for first half, especially relative to the last 2 years, we saw declines in first and second quarter. So if you have a view, kind of the rate or magnitude of decline relative to what you think normal seasonal is for first and second quarter.
Are we going to forecast the next year's first quarter and second quarter?
Initial view, based on inventory and demand.
We have very strong demand in 7 nanometer. Let me just continue to say that. For the last quarter of this year, you're talking about the profit margin, right?
Yeah, the second question on margin I wanted to ask, it's about a point or two below the traditional, say, 49 to 50 target.
Yeah.
And Laura cited product mix. Next year, 7 will be more mature. Do you think you have the catalyst to get back to that 49, 50 or other factors like 28 over supply?
Well, let me answer
that.
your fourth quarter's profit margin is a bit lower than we used to have. That's between 49 and 50. That's because of a product mix Laura just mentioned. Product mix, one of the major reasons is the 7 nanometers ramp up much faster than we thought. And the demand is very strong. And so that lowered down our margin a couple points. I'll let the CFO to explain the number.
CC mentioned about a 7 nanometer being particularly strong compared with our other leading edge technology in the past. It does dilute our corporate margin level starting from the third quarter this year. Going to the fourth quarter, as I mentioned, the revenue contribution will be 20%, more than 20% of our fourth quarter revenue. And the margin for 7 nanometer at the beginning stage is still below corporate average. So the dilution in the fourth quarter will be more severe than the third quarter. Our estimation is between 2 to 3 percentage points for fourth quarter gross margin. Yeah. Going into 2019, the ramp will continue to be very strong. So we believe the margin dilution will be eased off when we reach to the second half of 2019.
Okay. Maybe I'll just the follow up on that first one about sales. You mentioned 7 is very strong, but I guess, do you have a view the rest of the business may be doing some further inventory adjustments in first quarter?
Laura?
There are several days above seasonal this quarter, and going into 2019, I think inventory will be gradually digest when we move into the second half of 2019.
Okay. The second question I wanted to ask was about the 7 plus versus 5 nanometer. You mentioned 2020 would see the very strong ramp up of tape out and activity and volume on 7 plus. Is it your view? I think last conference Mark said 5 was a little bit more conservative at this stage. So how's your view now for interest activity and expectation for a steep ramp up of 5 into 2020?
We still expect a very fast ramp on 5. The reason is simple, because of a lot of product developed in the AI area. You need the speed, you need the low power, and you also need the small footprint. So from today, we can see when we work with our customer, the ramp will be steep again.
Okay. Do you think mobile will also contribute in that steep ramp?
Still come from the mobile phone first, and followed by other applications.
Okay, great. Thank you.
Next question will be coming from Citigroup's Roland Xu.
Good afternoon. I would like to follow up for this 4Q gross margin guidance. If I compare with 4Q last year, actually we have a similar percentage contribution from this leading edge. Last year, 4Q 10 nanometer was about 25% of the total revenue. And in 4Q this year, actually we have a favorable exchange rate compared to 4Q last year. And also we have this improved back-end profitability. So how come we still have a lower gross margin compared to 4Q last year?
There's about 2 percentage point difference, this 4Q versus last 4Q. Okay.
Yes.
There's one reason is product mix issue. I'm particularly talking about 28 nanometer. You know, our 28 nanometer is very profitable, and the contribution to corporate revenue has declining from last year to this year. So these are 2 reasons: product mix because 28 declining, and also because the utilization of 28 is not full. Yeah, that's one reason that this new phenomenon.
Okay, so how about the standard gross margin? Does it change?
Structural profitability is still intact, no change.
Okay, and also last quarter you talked about for longer term our financial objective for gross margin is 50%. So is this a 50% a fixed number, or this 50% is a average for the upcoming few years?
50% is our goal. We aim to achieve that. If we can have higher utilization, I am quite confident we can achieve that.
Okay, so this year I think probably we are not able to achieve this 50%.
No,
because of the utilization.
Not this year, and also because the 7 nanometer ramp is more severe than previous node. So first year dilution is slightly bigger.
Okay, thank you. My second question is, AMD starts is 7 nanometer CPU from server, and also ARM recently also talked. They have this new brand server product. So is server CPU going forward to be a very significant part of our business going forward? Thank you.
It will be an important part. Significant, maybe.
So your full growth platform, smartphone, HPC, IoT, and automotive. And so this server CPU will be in HPC, sir?
That's right.
Okay, thank you. Can you just reiterate the growth breakdown for this full platform next year? Thank you.
Okay, let me give you some color on it. In the next few years, if we look ahead, actually, the smartphone going to be in our daily life even more and more. So we have a 4 growth engine. One is a mobile phone. Actually, it's a high-end smartphone. Second one is high-performance computing, automotive, IoT. The mobile phone probably for TSMC will have, in 5 years, a CAGR. If I look at it right from today, it will be mid-single digit growth. And all other 3 platforms will have a very comfortably double-digit growth in the 5 years time frame. And so that's did that answer your question?
Yes, thank you.
You're welcome.
Next question will be coming from UBS, Bill Lu.
Hi there. Thank you very much. First question is on China. So a lot of concerns about the trade tension, about the economy slowing down, etc. Can you talk a little bit about what feedback you might be getting from your Chinese customers, both short-term and long-term? And short-term meaning whether you're seeing any increasing levels of conservatism on ordering on demand. Longer term, is there any change in the strategies of these Chinese customers in terms of perhaps less reliance on the U.S., et cetera? Thank you.
To answer your question, for the short term, we did not see any impact, if there's any at all. So our China customer, no, they did not change their behavior. So we continue to work with the customer to produce their product. For the long term, due to the trade tension, your question is due to the question. Let me answer the question by another way. TSMC has been proud to be everybody's foundry. So if there's a trade tension, if there is, and if it continues, I think the TSMC, the impact to TSMC will be less or minimized, because if we still need the semiconductor device, and TSMC is everybody's foundry, right? So whether produce here, produce there, is all TSMC's customer.
Great, thank you. I know 2018 is not over yet, but if you think about the next couple of years, I know TSMC has talked about a long-term growth rate of 5 to 10%. Now, I feel like more recently you've talked a lot more about the progress on 7 nanometers. We all know about Intel struggles with their process technology, and it's public information. They've announced it, right? So, and then you've got some good design wins. Can you talk about your long-term outlook 2019, given these drivers? You just said 3 out of the 4 new drivers will be above 10%. So are we looking at something more towards the high end of that, or how do you think about that?
We continue to say 5 to 10% growth rate. Probably I would like to, following your question, I would like to say probably tends to be the higher side of that 5 to 10%. That answer your question?
Yes, thank you very much.
Next question will be coming from Daiwa's Rick Xu.
All right, thank you. 下午好. My first question is, I know C.C. was talking about your more than 100 tape out for N7 and N7 Plus. Can you give us a little bit more idea about the breakdown? I would like to know how many tape out for N Plus, and also what kind of application for that.
Okay, N Plus is a tape out, product tape outs. I'm talking about product tape outs. It's still a small percentage of the total N7 nanometers node, as I just mentioned. But then after 2019, I expect 2020, when the current customer, they start to design on their second wave products, then it will be more of them on N7 Plus. So I don't have a specific number for you on 2020.
Okay, thank you. My second question is, you also mentioned that your N7 will likely be another long node. So presumably, probably something like N28 in terms of success. So my question is, in terms of capacity build, I know you don't talk about the capacity number, but in terms of capacity build, would you benchmark your N28 in terms of capacity number?
We build our capacity according to the customer demand. That I can assure you that. Compare with a 28 nanometer,
right.
I cannot make any comment right now.
Okay. Well, thank you so much.
Okay, next question will be coming from Morgan Stanley's Charlie Chan.
Thank you. So my first question is regarding the semiconductor inventory. So in which segment do you see more inventory? Because we are hearing lots of noise about, automotive, industrial segment weakness, and some cloud CapEx cut, right? So can you give us some color about where do you see the inventory, and also your 8-inch fab utilization rate? Thanks.
Well, I don't think we want to specify which product sector that have high inventory. But let me assure you that this year, at the end of this year, the inventory level actually as compared with the last year's same time is much smaller. So even we have some kind of inventory adjustment, I don't think the impact to the next year's quarter or next year's first half will be as severe as we saw this year. All right. So that's all I can say, because it's a very dynamic. Laura, you want to add something?
If I can add some color to your questions. If I look at the fourth quarter, we have just guided a 10.7% growth quarter over quarter. But looking at a segment, fourth quarter communication will grow very strong. Computers, small growth, lower than the corporate growth, so that area is relatively weak. Consumers is weaker. It's negative growth, and industrial is a small decline. So maybe this can give you some color about which segment has more inventory.
Yeah, thanks. Yeah, so maybe this is also related to Bill's previous question, right? So when you analyze this inventory customers' demand, do you think there is any impact from any macro factor, including the China-U.S. trade tension, or is just normal semiconductor cycle?
I would say it's just a normal, inventory cycle.
Okay, thanks. Yeah, and next question is also related to 7nm plus, right? So you mentioned only a few tape outs, but sometimes one tape out can be very significant to revenue, right? So can you give us some comments regarding the 7nm plus revenue contribution next year?
No, I don't want to specifically say which one.
All right, thank you.
I think at this point we would like to turn the questioning to the callers on the line. So, operator, could you please put the first caller on the line first?
The first question is from the line of the SIG. Your line is now open. Mr. Hussaini, your line is now open.
Yes. Thanks for taking my question. I want to go back to your view on 2008. An interesting year because we have a migration from 4G to 5G cellular communications, which could adversely impact demand. But you also have AI and the IoT ramping. How should we think about the mix changing and would new applications and a continued share gain would enable you to actually offset any adverse impact as we might go to 5G?
Mehdi, in fact, we can only hear your voice in a discontinued manner. So could you please repeat your question again? Maybe keep your voice a little bit away from the microphone.
Okay. Sorry about that. I'm just trying to better understand how you're thinking about 2019. It seems like there are many new projects that are ramping given the number of tape-outs at 7 nanometer. And we also know that in the smartphone market, we're in transition from 4 to 5G. In that context, should we expect new products, especially for AI and IoT, be strong enough to offset any adverse impact from migration from 4 to 5G?
So you want to repeat the question?
All right, let me try. I think Mehdi's question is that he is very positive about the outlook for us in 2019 because we have so many new product launches from our customers using 7 nanometer and smartphone is entering into a 5G era. And so he thinks that we may get a lot of new products in AI and IoT, which would be able to offset the migration from 4G to 5G?
From 4G to 5G?
Yes, okay.
Well, that's the question. So, looks like the question says, indicate that 4G to 5G there will have a dip. Actually, it's not. 5G in 2019, we expect start to grow, but not a significant number. So most of the phone, the smartphone, I mean, it will be in 4G still in 2019. However, you mentioned about the AI and other products segment. Yes, that will start to grow in 2019. And we expect a lot of new product other than the smartphone will contribute that 2019's 7 nanometers of business.
So could the new product actually be big enough to help you with a 5 to 10% revenue growth? And I'm asking you this because this year we've had adverse impact from customer inventory and cryptocurrency that impacted your overall growth target for 2018. But in 19, would new products offset any weakness that is associated with the mature products?
Well, in 2019, as I just mentioned, the inventory correction will be much less effect as compared with the 2018, beginning of 2018. So definitely our growth rate in the 5 to 10% will be much likely and in the high side. That's what I say. Not only because of the new product.
Okay, so Mehdi accept our very positive outlook for 19. Good. And so, operator, could you please go to the next caller on the line? Thank you.
Thank you. The next question is from the line of Gokul Hariharan from JP Morgan. Your line is now open.
Yeah, hi. Thanks for taking my question. My first question is on the China demand and capacity build-out. Could you talk a little bit about the progress of the build-out for N16 in Nanjing? What is the schedule for phase 2? And has there any change in plan post the weakness that we have seen in cryptocurrency demand for some of the Chinese customers? That's my first question.
So Gokul's first question is he asks us to update our Nanjing fab's progress, and he asks if we have any changes in plans to this ramp up in Nanjing fab because of the weakness in cryptocurrency mining.
The Nanjing chairman want to answer that?
We had a 10,000 wafer per month installed capacity currently, and we're planning to increase the capacity to 20,000 wafer per month next year. And we are developing customer as well as some derivative technology that are related to the 16 nanometer. So we are progress as we plan.
Okay, thank you. So my second question is on N7 and N7 Plus. Now, TSMC appears to be in the best position to comment about the benefits of EUV, given that you have N7 and N7 Plus, one in production, one in risk production. Could you talk a little bit about the kind of improvements that we are seeing, either from a yield rate perspective or reduction in mask layers, etc., and the impact in terms of overall cycle time for the fab comparing N7 and N7 Plus?
Okay. Actually, the question is about the EUV and how much of the benefit we can get from the EUV, right? Usually, if we are not using the EUV, sometimes for the very critical dimension on the N7, you had to, or N7 Plus, you had to use in the 4 layer of lithography to have to pattern one of the critical dimension. Now using the UV, you just use 1 layer, so that you reduce the cycle time by 4 times of photolithography, 4 times of etch. Now you become 1 lithography, 1 etch. In total, how many layers we reduce? That is depends on the customer's requirement, but usually, I just give you a hint already, right? 4 layers can become 1, and we are replacing some of the three layers to become 1, and we have a few layers of that. So that gives you a hint. Cycle time reduction, definitely, because of you do 4 times and do 1 times, that's a big advantage. Productivity-wise, today UV is progress very well up to our expectation. And in fact, TSMC has turned on the 250 watt power, and we believe we are the only one company continuously run the 250 watts UV power so far today. Okay.
Okay, that's very helpful. Thanks.
Now we can come back to the floor. Next question will be coming from CL Securities, Sebastian Ho.
Yeah, thank you. My first question is on the trailing edge profitability and outlook. So a couple of your peers in the past 2 years have decided to not to stop going advanced. So now their strategy is to focus on the node they already have. And China is also ramping up some trailing edge technology capacity. So it seems like more focus on there. And understand that TSMC actually generates lots of the profit cash flow from trailing edge technology. So how do you see this dynamic going forward? Is there potential for you to for this to negative impact your trailing edge profitability? This is the first question.
Okay. Actually, I don't want to comment on my competitors' strategy, but let me again stress our mature nodes strategy. We continue to develop some of the specialty technology to meet the customer's requirement, right? I just stated in that. And there's a lot of specialty technology we are doing. I give you some example already, power management IC, CMOS image sensor, MEMS, everything. So that will help us to compete with our competitor. Actually, this kind of specialty technology, particularly, we have to work with the customer. And so that's why I say working with the customer to meet their requirement. And that, in turn, to give TSMC's business. And that's a way that we migrate the logic technology, pure logic technology to the more advanced node. But for the existing capacity, we develop into the specialty technology. And so our strategy is still meet customers' requirement, but we don't increase the existing logic capacity.
Right, but I thought TSMC has been doing this for a long time. So
yes.
You'll keep doing this. But the real change is not what you're doing, but the real change is what your competitors, the dynamic, the more competition threat from.
Well, we already have a lot of competition. Before they announced that, we still think they are the competitor. No doubt about it. Not because of they drop out some of the technology node they don't want to do. No, we are not going to change our strategy because of that.
Fair, thank you. Second question is still on the node profitability. So I remember the rule of thumb for TSMC node profitability is that N-2 node usually have the very good or probably the highest profitability of for TSMC. So now we're already ramping up 7. So the N-2 for you is 16. Understand that the 28 used to be very profitable, as Laura just said. So I just wondering if based on this, assuming 16 and 20, we compare 16 and 28, assuming they are both depreciated at the same utilization rate, will 16 be more profitable than 28 or similar?
Wow, this is very specific. You ask the profitability. Laura, are we going to answer that one?
I probably cannot quantify that, but we don't know whether you said N-2 is the most profitable node is correct. But eventually, I think as we continue to improve the productivity and we keep very competitive specialty technology for the mature node, our margin will be all very good.
Okay, let me ask from another perspective. Is that some of this capacity on 16 or 20 was installed in 2014, 15, so which means that they will become fully depreciated very soon. So which means that these will become a margin profitability tailwind for TSMC starting from next year, partially offset some of the 28 headwinds. And is that the right way to look at it?
We certainly expect that. All right. You're talking about the fully depreciated tool to generate the more profit. Yeah, you can calculate. We have a 5 years of depreciation period.
Right. So which means that by the same time next year, regardless of the utilization rate or whatever pricing, 16 will likely to be more profitable than 28.
Actually, TSMC's 28 nanometer is very profitable. And that is, what should I say? You say 16 is better than 28? And I hope so. But I cannot tell you the true number.
Okay, thank you.
I think our profitability is not depending on which node is better than which other node. We want all the nodes to be very profitable.
Thank you.
Okay, next question will be coming from Morgan Stanley's Charlie Chan.
Thanks for taking my follow-up questions. So after the recent industry consolidation, does that change anything, like your bargaining power and also you're thinking about the cash return? So what does it change you're thinking about, for example, the payout ratio going forward? The industry consolidation.
Industry consolidation?
Yeah, I mean, Global Foundry exceed 7 nanometer, and Intel seems to be struggling with their leading edge. So I would assume competition in the leading edge is getting less, right? So in that case, maybe your bargaining power can increase, and also you have more cash may free up to return to the shareholder.
I don't want to say that because of my competitor. Well, in fact, Intel is my customer, so we respect their performance, of course. But TSMC's strategy actually is working with the customer. And whether that I have a competition or I don't have a competition, that's independent of that. And so we think we offer a very good technology value to our customer. Customers are happy, so we are working together and growing the business together. I'm not going to tell you that's my pricing strategy. That's not in discussion.
Okay. Yeah, so your current payout ratio is around 60%, right? So in what kind of circumstance in the long term would you consider to revise up your payout ratio to maybe 70% or even above?
Actually, we have been paying around 70% in the past few years. And I have said many times, and with 5 to 10% growth, and we are confident we can continue to generate increasing free cash flow. That will be the source for the increasing of cash dividend. Mm-hmm. Yeah, so we still with that kind of commitment.
Mm-hmm. Thank you. And the next follow-up is regarding that EUV question, right? I know it could be too direct to ask about revenue contribution from 7 nanometer plus, but from another angle, what keep your customer hesitating to adopt the 7 nanometer plus, right? Because you mentioned few tape outs. Is there any concern about the throughput of EUV or capacity of EUV? What keep a customer hesitating about EUV adoption next year?
Let me give you some explanation. Because of TSMC's 7 nanometer is very successful, so customer using the design on 7 nanometer first. But 7 plus certainly have some advantages, right? We're using the EUV, you have a shorter cycle time, and I just say that it's a kind of better pattern control, so that means your critical dimension has been tightly controlled. That helps the performance also. So we expect the customer moving their second wave product, a lot of them will go to 7 plus. And have there any concern about the EUV's maturity? That's what you are asking.
Yeah. So everything sounds very decent, right? So what's the issue? Price or any issue?
Oh, what's the issue? Okay. Yeah. EUV progress steadily to our expectation, but as compared with deep UV photolithography, the maturity is not comparable. Not yet. EUV still climbing up, and we hope that the productivity can be better and better. But today, not yet. You just look at how many deep UV we have and how many EUV we have. You know what I'm talking about. I mean that in the industry. Just say in the industry. Okay.
And lastly, if I may, right? I think AI semi has been a very topical growth driver, right? So I think recently it is getting more clear that some ASIC claims their performance can be 8 times better than GPU. Those are general purpose, right? So with now a lot of new ASIC coming to a line, do you think that's going to impact your overall AI semiconductor revenue? Or put it in another perspective, do you expect any reacceleration or slowdown of your AI semiconductor business in the coming year?
I think the AI's application will be everywhere actually, from the server, edge server, or to the end device that's just like a smartphone in everybody. So this kind of a development is to our advantage because TSMC certainly have a technology leadership. And all the AI will be effective. You need the very advanced technology for the highest performance computing. So I don't see the effect that you're talking about. This application is better than that, so that will affect the growth or something. No, it will be continuous to grow. And I expect it to grow much faster than I predicted here.
Okay, thank you.
Next will be coming from Deutsche Bank as a follow-up question.
Thanks for taking my follow-up questions. Regarding the 7 nanometer tape-out next year, so CC, can you give some color regarding the portion of 7 nanometer versus 7 nanometer plus EUV? So will customer shift to 7 nanometer plus EUV aggressively in the second half next year in the 2020?
Your question is the 7
you
plus?
mentioned more than 100 tape-out numbers, right, for next year, by the end of next year. So
right.
Will the majority of that be 7 nanometer or 7 nanometer plus EUV?
Next year is still 7 nanometer.
Okay.
Because of 7 plus, we're working with the customer, and some of the customer moving a little bit faster, some of them. And for those customers are already in the 7 nanometer, they are planning on the second wave product in the 7 plus. Mm-hmm. Okay. So next year, I can say most of them are still in 7, but then activity will start to rapidly grow in second half, and then 2020 that will be even grow faster.
Okay, but for the whole year tape-out number, right? So can we say the 7 nm plus UV tape-out number increase quarter by quarter through end of next year? Can we say that?
Will increase quarter by quarter? Yes, you can say that. But it's still a smaller portion of the total 7 nanometers node.
Okay, so based on the 7 nm plus UV tape-out by customer planning, right? So can you expect the 2020 we will see very big volume 7 nm plus UV mesh production and the revenue contribution? Because you mentioned increase quarter by quarter, right? So we just try to find out if it will become very big revenue contributor and yeah.
If I can forecast well, I mean that's one tape out, especially for some of the applications, takes about 1 year to full ramp up.
Mm-hmm.
So 7 plus will be increasing, but the revenue I would expect 2020, 21 start to see the big number.
Okay.
But so, not the 2019, not the first half of 2020.
Okay. How about second half next year? You think that will be?
You continue to nail down the number. Sorry. Okay,
maybe
2019 less than 1 billion.
Oh, that's 1 billion. Thank you so much. Thank you. That's good.
All right. Hopefully, next question will be better, and it will be coming from UBS Bill Lu.
Hi, thanks again for taking my question. So it's a bit more of a long-term question. Hoping to ask you about the R&D, and maybe this is both for Dr. Wei as well as Laura. If you look at Moore's Law, certainly not getting easier. If you look at the number of players that can share the R&D burden, I think it's getting less. And number 3, TSMC is clearly ahead of the competitors now in terms of process development. So as you look out the next 2-3 years, do you have to think about R&D increasing at a faster rate? Thank you.
We do think the continue going on, the smaller geometry takes a lot of effort to develop the technology. But I would like to use in TSMC founders' wording to answer your question. So long as some people can develop it, TSMC will be there. That's our commitment to the customer. All right. And in addition to smaller geometry, actually, TSMC also developed the wafer levels packaging, advanced packaging, to help the customer improve their system's performance. And we think we have these 2 weapons in hand, and so we are in a very good position to compete in that field.
I guess I'm not doubting TSMC's abilities to develop it, but I think TSMC is taking on more of the burden now. And you also have to add the cost for advanced packaging R&D as well, right? So I'm just asking about the cost.
The cost, actually, I would like to say the value of our technology, all right? That's what we discuss with our customer. The cost, we continue to working on it, and we hope, TSMC has a capability and ability to lower down the cost, as we already proving in the previous years.
But I think Bill's question is whether or not R&D as a % of our revenue will increase in the future because of our taking up a bigger burden.
We might, but I cannot tell you the exact number. Great. So that's a cost.
Yeah. Thank you.
All right. Follow-up question from Citigroup's Roland Xu.
Just a follow-up question for the profitability, but I'm talking about the back-end side because since last quarter you kept talking about you have this improving profitability on back-end, and also in second quarter, in last quarter you said the back-end actually was able to partly offset the low gross margin from this poor product mix. But consider your back-end is just a relative small part of your total revenue. So it has to be with a very good gross margin in order to partly offset the unfavorable product mix. So how does your back-end gross margin compare to your corporate average right now? Thank you.
Back-end margin is indeed improving, but we don't compare back-end margin with corporate average, because back-end, the nature of back-end is there's a very high asset turnover and lower margin compared with wafer. So the overall investment return is pretty good. If you look at our IC, it's very good. So we don't compare back-end margin with corporate average. So if our back-end revenue continue to increase, it may dilute a little bit of corporate margin, but the overall investment is pretty good. Okay? And we have seen our advanced packaging, we continue to invest in capital, and we see more customer adoptions. So we are increasing the size and the business volume of the back-end. And of course, we continue to improve the productivity. So back-end will be a creative to TSMC going forward.
Okay. Can we have the rough number of how much the revenue is coming from back-end so far?
It's around 2.5 billion this year.
2.5 billion. This is include wafer bumping, or this is purely from info and the CoWoS?
Including that all the back-end, that including the wafer bumping, testing, info, CoWoS, everything.
Okay.
That's roughly a little bit more than 7% of this year's revenue.
Okay. But Laurent, you said if the back-end revenue is exceed a certain portion of the total revenue, probably the corporate average gross margin will be diluted. So what is the threshold for the percentage of the back-end? Thank you.
No, the back-end is only 7%. It's still low compared to our very big wafer size. But back-end, I think the back-end probably is cyclical because it's very concentrated on several segments. Cyclicality is more of an issue. But in terms of financial return, we have that in our model, so we're not worried about that. Of course, we continue to improve the profitability.
Okay, thank you.
Follow-up question from Morgan Stanley's Charlie Chan.
Thanks for accommodating another follow-up, right? So I think because the stock market weakness, so I need to a little bit microscope on your comments on near term. Right? So CCU previously mentioned that 2019 inventory correction in 1Q wouldn't be as severe as the beginning of this year, right? So I don't know, why now you have this kind of visibility. Is that because of customers' order behavior, or what have you seen for the coming 1Q that can make your inventory correction less severe than the beginning of this year?
You ask where I get out those information to get the conclusion that next year's 1Q inventory correction will be less
severe than this year. Yeah.
Less severe, huh? That's interesting. Because of we work with customers, right? And Laura just mentioned about those market segment, communication, consumer, and computer. And we look at that. We work with the customer, and we understand their business. Not 100%, but we understand quite well. And so we can do this kind of forecast.
Mm-hmm. Okay. Thanks. Yeah. So, is that fair to link the industrial segment decline to the edge utilization rate? Can I assume that edge utilization is not as full as before? Is that a fair assumption?
You can repeat what I said to answer that question, all right? I mean, that's you are asking very specific that utilization and the customers' demand. Actually, let me say that we are very optimistic because of we work with the customer. As I said, we work with the customer. We understand their business, and going forward, we know that they are doing the inventory adjustment, but they also discuss about what they want in the 2019, which I'm not going to give you some forecast today, not yet.
Okay, thanks. Sorry for those very detailed questions. Thank you.
Questions will be coming from CL Securities, Sebastian Ho.
Thank you. Follow up on the advanced packaging. I have the impression that of this year, more than 50 7-nanometer tape-out. A huge part of that, or a large portion of the customers will use our advanced packaging solution. So moving to next year, so our tape-out number will be 100 or 100 more on 7. So it's still that kind of the percentage was still the same, which means that the advanced packaging customers on 7-nanometer will also double.
Let me answer the question that advanced packaging that include the CoWoS and info. And the CoWoS is for very high-speed performance, such as like a graphic chip, such as some of the networking processor. So those are using CoWoS. And for the info, that a lot of them are using for the mobile phone business. So that I can answer you, but I cannot give you, say, which one.
No, I'm not asking which one. I'm just asking this still for the next year, 100 tape-out, a large portion of this using our...
Oh, okay. Well, sorry that I misunderstood your question. So the next year, the info for the mobile phone application some of them will move into the high-performance computing also, because that offer a little better cost structure. And the CoWoS continue to be the high-end, high-performance computing product. And we also introduce SOIC, as I just mentioned, that even much better system performance. So we continue to progress our technology, and did that answer your question?
Sort of. Well, anyway,
so
my question is very simple, actually. I simply just want to know that your earlier comments on the large portion of the 7-nanometer customer tape-out will use our advanced packaging. And now our tape-out numbers, like based on your comments, it seems like double from this year to next year. So this large portion still apply on the doubling 7-nanometer tape-out next year. Is that right?
Oh, I see. Develop one new back-end process, packaging process. It actually will last for many years. So next year's 7-nanometer or 7+ application for those products are still using the info and also using the CoWoS. Yes. And whether it's double or not, I'm not ready to answer that question yet.
Okay. Thank you. That's clear. Second follow-up is, I remember last quarter when CCU talked about the 28 nanometers outlook, you mentioned the 2019 will come down and expect the nice recovery in 2020 because of the 22 nanometers adoption. So today you just mentioned that you expect the overcapacity will be the norm for several years. So what I interpret is that it sounds to me that over the past 3 months you become more cautious, conservative on 28 compared to 3 months ago. Am I interpreting that right?
You may be right, because of recently a lot of capacity has been built on 28 nanometer. as compared with 3 months, 6 months ago, right? So that makes the overcapacity a little bit more severe than previously predicted. However, I would like to stress again, that the TSMC developed shrink of the geometry for customer to gain the benefit of performance and better density. We also develop specialties. So that's why I say that we have confidence a couple of years later that our 28 nanometer will enter into a new era with a high utilization rate again.
Do you view those excessive 28 nanometer capacity or the more than expected newly add 28 nanometer capacity is a real threat to you or they're a non-event? They're effective capacity or they're
we always compete in the market, whether they build a capacity. But of course, let me answer the question directly. Overcapacity is not good for any player in this field. Definitely.
Okay. Thank you.
All right. I think given the consideration of time, we will just have Randy Abrams to have the last question.
Yeah, just one quick follow-up to that last line of discussion. Because just in the last few months on the 28, have you changed your view on the 16 migration? Because one factor, some foundries, if they stop at 28, can address the 16. So are you taking a more aggressive approach? So is part of your view on 28 of you getting more positive on 16, and you're trying to encourage more customers to migrate to that node where there's fewer players?
So your question is, are we going to repeat this kind of a 28 migration on 16?
In the last few months, are you also seeing more customers demand to actually migrate to 16? And is it also more your strategy with some competitors not moving on? You actually have a bit less competition on 16 and below.
Yes, we have less competition in 16 and below, yes. But then, so long as you have one competitor, that's good enough, right? That you have to work very hard to compete.
Okay, but I guess on the customer side, are you starting to see more, as part of your 28 coming down, you're actually seeing more customers with an urgency or a desire to actually do that shrink? So you're seeing any change in that cadence of customers moving from 28 to 16?
Can you be more specific on your question? Say that
just the view you do feel like there's more capacity on 28.
Yes.
But flip side, are you seeing some of the demand you previously expected on 28 now shifting to 16 and 12?
Okay. A lot of my competitors can do 28 nanometer, but not a lot of my competitors can do 16 or 14 nanometer, at least for today. And so far, we did not see the same phenomena as a 28 nanometer. Did that answer your question?
Okay. It was, just more about demand. Do you see more customers now trying to make that shift to 16 from the customer side?
It will continue doing this way, actually, that the customer migrate faster than we expected into 16, right? And you expect that in the 16 or 14 will migrate faster than we expected into 10 or 7?
No, the question is now 28, you're more worried about oversupply. Is part of that from you're seeing more customers migrate to 16?
Yes.
Okay.
The answer is yes.
Okay, thank you.
And they migrate into 10 and 7 also. So they're faster than we expected. Yes.
Yes, thank you.
Okay, this will conclude our conference today. Please be advised that the replay of the conference will be accessible within 4 hours from now. Transcripts will be available 24 hours from now, both of which will be available through our website at www.tsmc.com. Thank you for joining us today. We hope you will join us again next quarter. Goodbye and have a good day.